Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you have questions with anything, check out finding-value.com. That's where I dive deeper into all of these topics. I did just release a midweek update and shared my opinions of what I'm doing at this time. And we still have a coupon code MAYDAY, MAYDAY, if you want a discount. There is a storm going on here, so if you hear some lightning or thunder in the background, that's what it is. So let's dive in here. Let's take a look and see what's going on today. Starting with the DXY, I still think this looks pretty weak. What generally occurs is you get a breakdown out of a trend line, like that one there. Then you get a return move, like this here. And most of the time, what occurs is you get an initial surge out of it, you get a retest, and then you get a move lower in the direction that it broke out originally. That's kind of the classical technical analysis. And we also saw that coming the entire way down. This flag pattern to flag pattern to flag pattern. It's that stair-step pattern that I talk about a lot, even on the channel here. Looking at yields are going to drive this, in my opinion. The weaker dollar, it's going to be yields that are driving it. So the 2-year yield, this is like a perfect setup that I usually look for. We had a massive surge lower out of the pattern. There's the pattern going on up. We've got a move up, and notice the candlesticks, the opening and closing prices of the body are contracting as we go upward. So think of this simply as like a rising wedge that will eventually break lower. That's my guess of what's going to happen looking forward on the 2-year yield. So I think that we could potentially have lower yields even still. Now, I don't know if it's going to break back below this low. We might just break down and go sideways for a little while. Or maybe fear creeps back into the market and we get moving at a much faster pace to the downside. I don't know that until we start to see it. And that is why I wouldn't jump in front of the train. I would wait to see what this looks like first. I'm waiting to see if this holds. I'm waiting to see what kind of selling pressure. Do we get a big fat bearish engulfing? All of those types of things. The 10-year yield doing something very similar. One thing that you can look at is the size of the down candlestick here, and then how many days it took up to go up within this one candlestick. So basically, we had the reversal candlestick going up, and we have these 2 days within this one day. What I generally look at when I see this is the selling pressure and then the weaker bounce upward, which generally rolls over. So I do think that lower yields is probably coming to the 10-year even. And then the 30-year, right on the support level, and we've got a big impulse surge out of it, and we're doing a retest move right now on the 30-year yield. So that's what I'm seeing in yields. TYX, TMX ratio, not much movement there, which means the yield of the 10-year and the 30-year are moving very close to each other. We're at a very low spot, and almost every single time in these circles is a great time to load up on precious metals and ride it upward to a level, up at these levels here, where you may have to get out. Somewhere like in 2011, 2012, these are exit points. We have a long way to go in precious metals, in my opinion, but that doesn't mean that every day is going to be an up day. We obviously had strengthening yields and strengthening dollar today, which is going to weigh on gold and silver. TLT bond prices. So again, it's the opposite. You get a breakout move, and then you get a return move, a retest. And then we'll see if this heads back on up and outward. So bond prices, I think, will go up over time, and I think yields will go down for a period of time during this slowdown or something like that. The 2 and 10 is uninverting still, and we're almost at that 1-to-1 relationship. So the curve is flat where the 2 equals the 10. This is where things can get a little bit hairy. As we go below the 1% range, hairiness comes out. So things can get a little hairy here if we continue lower below that 1 and the curve uninverts. I'm usually pretty patient around this level, and I like to observe instead of take too much action. Gold down just a little bit. This will be impacted if it's a sell everything type of event. That's your opportunity, in my opinion. If it gets drawn down, I would buy it up and look for a move higher. Gold does very well when the federal funds rate drops and that yield curve uninverts. It doesn't mean that it goes up every day. It doesn't mean that it won't be impacted if other things start to pull back in tandem with gold. So, or I should say, when other things pull back, gold's going to get sold off in tandem with the other stuff. Silver also, I think, pulling on back, and I do think we could hit 26, 25 area down here. Great time to be looking, guys. Great time. That'd be a retest of a breakout, retest, and then I think we'll move on higher. So silver looking good. Short term, still some weakness. Medium term, I think we're going way higher. Platinum up a little bit today, and we still haven't broken out of this pattern here. Look for basing patterns. This is a basing pattern. This is your consolidation is from here to here. And then this is basically basing out right here, which I think will be a launching pad in the future. Palladium hasn't built that base yet. We've got the shoulder, head, shoulder, and then the neckline's the white line we've broken down. This needs time to base, in my opinion. So it might take some time here at support to move sideways and base out. So this might take some time. Sometimes it does run, but most of the time it creates a base and then runs from the base. Most of the time. So GDX, pressure to the downside, selling pressure. That does look like it wants to continue. It is a bearish engulfing, and I'm willing to bet that equities are being sold across the board. It isn't specific to any one sector or any one thing. We're seeing GDXJ, that bearish engulfing, it could go lower. Same with SILJ, bearish engulfing could go lower. Be patient here. We could get a really good buying opportunity, hopefully in the near term. And that buying opportunity needs cash. So be patient, wait for a turn, in my opinion. XAU to gold ratio also heading lower, 2.9%. It looks like we could head lower in the short term. Opportunity is what I call it. And this has broken the big downtrend line. It's still above it, and we could even come back here, which will be a good thing. It's going to give us an opportunity to buy some shares up. At least that's what I'm going to do. Crude oil up 3%. Big bullish engulfing. Looks like we could potentially head higher. Well, shouldn't XOP and OIH be ripping with a 3% reversal day? That's something we want to look for. Big 3% bullish engulfing. We should be seeing strength, outsized strength in the equities if we're coming into a bull market for crude oil. So right now, crude oil looks good. But that's a bullish candlestick, and we'll see if we get follow through for the next trading days. TTF gas continuing to rip, 5.65%. The momentum's to the upside. Looks good. Looks real good for TTF nat gas. Nat gas in America looking very good. That is a breakout of the downtrend line today. Kind of putting a little bit of the gap against that trend line. It looks pretty good. So that's looking a lot better, bouncing off support. Now our boy XOP, yeah, you know me, this doesn't look that strong, guys. It really doesn't. We were up 3%, and this is up 0.71% with momentum being lost throughout the day. What happened there? What's going on? We've also broken this uptrend line to the downside with a pretty big candlestick there. So again, I'm going to remain open-minded. The chart doesn't look that great to me. I think we could go lower. How could that be? How could we have positive fundamentals, positive crude oil price, and the equities are selling off? How can that be possible? Because the overall market, the macro of the overall market, is going to drag it lower. That's what. And the difference between the pricing of the equities and the fundamentals is what gives you the opportunity. That is what the opportunity looks like. Wait for the fear in the market to drag this thing lower and then buy it all up when the selling pressure subsides. OIH. So oil's up $3, or I mean 3% today, and we get a bearish engulfing today. What the heck's going on here? Gonna go lower, guys. So be prepared. Um, get your favorite companies. We're breaking out of this, and this could definitely drop lower in a kind of sell everything event. Bearish engulfing, bearish engulfing, bearish engulfing. So we could get a little bit of selling pressure here, and this could drop a little bit here, or a good bit. I mean, we'll see what the overall markets do, and we'll go over that later here. Newcastle coal futures continue to go up. That looks pretty good to continue higher. That's going to follow your TTF nat gas. We've got Sprout Physical Uranium Trust up 1.87%. We're still in this big flag pattern or whatever this thing is that it's morphing into. I would be careful though. The commodities look good. The equities look a little bit weak. So maybe Sprout Physical Uranium Trust will do all right. The equities might still be under pressure from the weakness in the overall markets. The uranium futures pricing is flat today, basically, but it's still in the corner of this. And this could break in either direction. Now, the overall markets could yank it lower, maybe, possible. And we'll watch it together here. URA flat today, 0.46%, but we lost some momentum. Whenever you see strong selling pressure like this, and then you get a bounce, like just don't get suckered in. Let this thing base out first. Let it base out like this, and then get suckered in as it gets rolled over. But we've broken that trend line. There's the trend line I'm talking about. This one. We need to base out, guys. Like, just I wouldn't jump in front of this. Uranium also seeing a bearish engulfing pattern. This definitely could go lower. I would wait to see what the follow through is. If all we do is go like this, then I'd say it's probably all right, depending on what the charts look like and how it consolidates. I mean, it could consolidate, like this, and then we break out down again. But whenever we have a lowering of interest rates, that's when you want to tread with caution. But we've broken this pattern to the downside, and we could see further downside in uranium. URNJ also experiencing that big bearish engulfing today, and we could see further downside here in the short term, unfortunately. Hate to be the bearer of bad news, but we do have a lot of support over here, so we'll see if all this support over here holds. Copper down 2.22%. We're going to come to a support level here at about 390. And we are getting we still have some strong selling pressure in there, some big red juicy candlesticks. COPX down 2.5%. That is a bearish engulfing, and the momentum is still to the downside. So we'll see if this support level holds at about 37 bucks. Iron ore up 0.74%. This is looking all right. It's a double bottom, and it's holding in there at the moment. We've got aluminum down 1.27%, and that very well could head lower. We entered this from the top side down, and this could be a continuation pattern where we head lower. Why am I so bearish? Because the charts tell me to be bearish at this time. Nickel down 1%. Again, I wouldn't jump in front of this. Let it base out. And there's a lot of weakness around us. So patience here. Mu up 0.71%. But we're underneath resistance. And we drop pretty strong here. So we very well could roll over here. So again, I'd be patient. Emerging markets up 0.62%, but again, we're sitting on resistance. So let's be patient here. Don't be brave when other things around us could potentially be selling off. KRE, another one that fell pretty quick, and we did get a bearish engulfing. That looks to me like we want to go lower. in the short term. We've got tan, which is already low, which could go lower. We've got lithium, another bearish kind of engulfing pattern there. Momentum's downward, but we are on support. And then REMX, again, the momentum's to the downside. We could see further downside in rare earth metals. Baltic Dry Index up, and we're at support, right underneath that support level. And that support's been there for a super long time. Back to 1988. Gotta love that. XHB home builders. This is a bearish engulfing. Looks like we could potentially go lower in the short term. I love it. Why do I love it? Because I am going to buy when this comes on down and finds some support wherever it finds support. I do think that lowering of interest rates is going to be supportive of the housing market. But in the short term, the sell everything is getting underneath the skin of a lot of people. And I think this has got more downside. Russell 2000, another big bearish engulfing pattern. Looks like we could easily go lower for the Russell 2000. The S&P 500 also getting the bearish engulfing. Looks pretty rough to me. We're going to go lower here, guys. We're going to go lower. That is what the chart suggests. That's what the short-term bearish engulfing candlestick also suggests. And the NASDAQ has it as well. That's confluence. So bearish engulfing here is where there's one here too. So we came up, came downward, flag pattern, downward, flag pattern, downward, downward. This could get ugly here, guys. We could see some selling pressure over the next however many days. SMCI missed earnings, down 20% today. The peak was at $1,200. We're at $490 aftermarket. Shoulder, head, shoulder, neckline going across. The bull trap, and then the bull squeezing of the bulls is what we'll call it. Nvidia down 5% as well with another bearish engulfing pattern. Now we've got these bearish engulfings all lining up. This to me looks like we could head lower. That's what I say there. Bitcoin also joining in the mix, down 2.9%, getting close to the bottom of this. We'll see what this looks like. It doesn't look very good, is what I'm going to say. Why doesn't it look good? Well, I don't just look at Bitcoin. We just looked at the NASDAQ. We just looked at the S&P 500. We looked at the Russell. We looked at the home builders. They all have bearish engulfings, guys. So the pressure in the overall market's that way. And that could easily impact Bitcoin. It's probably going to impact Ethereum too, and that's starting to break through its lower trend line here to the downside. And we'll see what follow through we get over the next few trading sessions. So yeah, I don't like the way this thing looks, but we'll see what happens. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code if you're interested and want a discount. And that's what the markets look like. Look a little bit weak. And I think with the overall markets looking as weak as they do, could easily impact the sectors that we're in commodities and precious metals. So I would look at this as a buying opportunity, maybe not in the immediate term, but maybe out there. It could be a few months away, even. This might take some time to work its way through. And I don't jump in front of these large moving candlesticks. They scare me, in fact. They scare me with cash. Or scare me into cash, I should say. But that's what we're seeing in the markets. And that's all I've got for today. So we'll catch you next time. This is Finding Value.